Hi everyone, welcome to FOREX TRADING EMPIRE YouTube channel. In this video, I'll be answering a question which is mostly been asked in the community and in the YouTube channel in the comment section. So mostly you guys have been asking me on how I do my own daily bias, how I look for daily bias, how do I go through my day-to-day trading, and what are the specific areas I'm looking at, and how I anticipate price to trade to a liquidity, and how I'm looking on how to take a trade that day, how I plan my day, and how to grow a narrative, how to have a narrative. So I'll be answering those questions, going through a blind chart. So I'll be starting from the dollar index down to Euro USD because those are the two major pairs I'm trading currently now. So before I start, make sure to like and subscribe to the YouTube channel. And if you're interested to join the Forex Trading Empire community, we have a big update coming up soon, which will be announced in the YouTube channel. But if you're interested to join the Forex Trading Empire community, make sure to check the link in the description below. You join the Telegram channel, you chat up the admin to get started. So on the dollar index, first I start my analysis from the dollar index because I'm transposing the analysis I get from the dollar index down to any Forex pair, even down to the index future. Because if you understand where the dollar is trading to, it's like understanding the bias of 80% of the currency pair in which you'll be trading, which if you are trading a Euro USD, you know that if the dollar is going up, Euro USD is going down because they are inverse correlation. Currency pair like Euro USD. So since I'm doing the analysis on Euro USD, but today is Wednesday, I'm doing analysis on Euro USD, so I'll be using the Euro USD. I'll be using the dollar index and Euro USD charts. First, what I do daily is I go through the daily time frame. I start from the weekly. So the weekly is that if I have a direction from the weekly time frame, I'm checking to see if that direction is still intact, if my bias from the weekly time frame is still intact, mostly on a Wednesday, because I'm looking for the full expansion on Wednesday during the London section before the New York section in most cases. So let me mark up this chart. First, I look on where price is trading to and where price is coming from. First, if you look clearly, price took out the sell side liquidity. Here is a run on the sell side liquidity. If I'm to place a fib, so I check if price is coming from a premium to a discount or is price coming from a discount to a premium. Now, if you look closely, price traded lower, which means price took out a discount liquidity, discount sell side liquidity. Price traded higher, trade above the 50% range into a premium. Now, what are the closest premium liquidity? What are the closest premium liquidity? Here's the buy side liquidity. These are the liquidity close. As soon as price trades to a premium above the 50%, this is a liquidity price traded through this fair value gap. Price traded through the fair value gap. Sorry, let me take it back to the weekly time frame. Price traded through this fair value gap. So this week I had been anticipating price to trade through this fair value gap heading to this buy side liquidity before the next drawn liquidity, which is this fair value gap, which I wouldn't be indicating. But you can go to your own personal chart to look at the specific areas I'm pointing out. Price took out a sell side liquidity, did a shift of structure, taking out this high. At this point, I'm forming a narrative to see if the weekly time frame. So since I'm using a blind chart, using an empty chart, that's where I'm going from the weekly time frame. In most cases, I just come to look through what I've done on the weekend. I normally do all this analysis on the weekend. So price did a shift in structure, move from a discount to a premium. I'm anticipating price to run through to take out the previous week high. With price already took out the previous week high. This is on Wednesday. I didn't do the recording much earlier. Even today, I was supposed to do it a little bit earlier before the London section, but this is currently close to when the London section kills on is almost over. I think we have an hour before the London section kills on is over. But I just want to post this out so that you can understand how I do my own personal analysis, how I go through my charts. The week already traded, taking out the previous week high. If you zoom closer, you can look at the previous week high. Here's the previous week high. Let me put a line to indicate the previous week high. Saying that Monday and Tuesday took out the previous week high is good to anticipate price to run the complete fair value gap, because price already traded past the mid-range. Anticipating price to trade to this buy sell liquidity will be my next draw on liquidity, but I'll be paying attention to the mid-range. Paying attention to the mid-range of the week. You can see there's a candles week here. So the mid-range is called the consequence encouragement level. So I'll be paying attention to the mid-range, to the 50% of the week, because I'm just looking for the next draw on liquidity on the daily time frame, not on a complete week draw on liquidity, which if you have a bias for the whole week, you can still stick to the bias. But due to weekly delivery, there might be a retracement before price trade to the mid-range. But I'm looking at the mid-range for the time being. Now I go down to the daily time frame. So the daily time frame is where I decide on where I'm anticipating price to trade to. So since price traded to this fair value gap, price did a retracement to this daily fair value gap. If you notice, price traded to the mid-range. On the previous week, on Thursday, price created a high, trading to the mid-range. On Friday, price did a retracement to the weekly range, which on the weekly profile, I've talked about it many times, that if Monday, Tuesday, Wednesday, and Thursday trade to the upside, Friday might lead to a retracement to the weekly range. On Friday, price did a retracement to the weekly range, trading lower close to this fair value gap. Monday, price open, traded to a discount. I'm anticipating higher prices. Same Monday trade to this fair value gap and closed above, leaving this order block is a clear indication to anticipate higher prices for price to trade to the buy side liquidity. So you can see it more clearly. Here's the previous week high in the mid-range of the fair value gap. Monday, price traded higher, left hand, order block. Tuesday, price retraced to the order block. I'm anticipating higher prices. Wednesday, seeing the fact that price respected the order block with an up close candle, it's safe to anticipate Wednesday London section to produce higher prices to take out previous day's high, leading to the mid-range of the fair value gap. So I'm recording this video a little bit late. So price already traded, I think, if to my target already, but I will explain more on Hero USD and how I took a trade. So this is how I have my bias. Now, I'm already anticipating higher prices to take out, to trade to the mid-range, leading to the buy side liquidity, the mid-range of the week, candles week. So you can see how easy as that, I already have a bias. I'm anticipating higher prices on the dollar index, which on Hero USD, I'm anticipating lower prices. So I go down as low as the 1 hour time frame just to look at price clearly. So it's on Tuesday retracement to the other block. So here's the other block high. Let me mark out the other block so that you can see it more clearly from the daily time frame. So it's Friday's high. Friday's high is the other block. You can see how precise price respected the other block. You can see the precision on how price traded to the other block and respected it. Now moving to the 1 hour back. Here's Tuesday, price traded to a discount, created an impulsive move higher, leading to the London section. So if I can add the section indicator, you can look at the London section. Now looking at this London section before, because I like to look at the 1 hour time frame of the dollar index before price opens. So price open. Here is a open range gap. So I normally leave it as white, open range gap. So here's a gap in price. Price traded higher, left the fair value gap. at the open range gap. So fair value gap, make this yellow. Saying that during the Asian section, price traded to this fair value gap, we expected the fair value gap traded higher. It's safe to anticipate the London section to produce higher prices trading higher. So you can do your own personal study and go to the 5 minutes. You will see entries, which I'm sure you can find the entry, which you can see the power of three, open price, trade to a liquidity, which is the fair value gap, testing the fair value gap again, shift the structure, retracement, leaving at fair value gap. You can see how price retraced to the fair value gap. You can see there's a liquidity void in the next candle's opening after the shift of structure, retracement to the fair value gap. You can see how price kept trading. Order block, price respected the order block, higher prices. So on Euro USD is the actual currency I used in taking these trades. So I'll move to Euro USD to explain more. Let's go to Euro USD. So if I'm anticipating higher prices on the dollar index, which I recorded a little bit late, price already traded higher. On Euro USD, I'll be anticipating lower prices. So the members in the Forex Trading Empire community, for those that attended the live lesson this morning, where I called out price anticipating lower prices on Euro USD, already knew that I was anticipating lower prices. So that was why I didn't have time to do the recording to post in the community and the YouTube channel. So on Euro USD, from the weekly time frame, I'll be going through the weekly time frame. I told you guys I'm using a Clyde chart with no annotations. On the weekly time frame, price took out this buy side liquidity. After the run on the buy side liquidity, price have been trading lower. Price did a weekly shift to structure as soon as price took out this swing low. Let me identify the swing low. As soon as price took out the swing low, price did a shift of structure, leading to the next draw on liquidity. Where's the next draw on liquidity? This swing low. The sell side liquidity. So this sell side liquidity is where I'm anticipating the daily time frame to anticipating this week to run through on the weekly candle. So if you're in the Forex Trading Empire community, you know that I was anticipating lower prices on Euro USD for I think a few weeks now. Around 3 weeks ago, I've been anticipating lower prices to take out the sell side liquidity. I think today we already traded the sell side liquidity. So on daily time frame, now is determining if I'll be looking for lower prices on the daily time frame. On the daily time frame, Friday, last week Friday's candle traded higher. Monday took out Friday's high, traded lower, closed below the candle's low, making the candle an order block. Making the Friday's candle an order block. Remember, on the dollar index, we identified the same order block. So you guys might be hearing some noise. I'm currently doing some walk around. So price traded to the order block. Price traded to the order block on Tuesday. We expected the order block close lower. Now, if price is respecting this order block, where will be the next draw on liquidity for price to dispose of this sell position? It will be on the sell side liquidity. So you can see how you have a narrative. The narrative is that Tuesday respected the order block. Wednesday, we are anticipating lower prices for price to run out the sell side liquidity. So on Wednesday, anticipating lower prices for price to take out Tuesday slow and the sell side liquidity we identify from the weekly time frame. Now moving to the 1 hour time frame before the London section. Before the London section, price traded lower from this swing high to a swing low. Price did retracement. As soon as the section opened, you can see this impulsive move lower, leading to the sell side liquidity. Currently, price haven't traded to the sell side liquidity, but I'm anticipating price to run at the sell side liquidity because in the dollar index, I'm still looking for more higher prices. So it's safe to anticipate price to run out this low. But you can do your back testing from on Tuesday as soon as price traded to this sort of block and how price has been declining from this from this 1 hour fair value gap. From this 1 hour fair value gap, price tested the 1 hour fair value gap, reject, did a shift to structure, did a retracement during the New York section, and price have been trading lower since then. So moving to the 5 minutes, I've talked about the power of trade many times in this YouTube channel. That as soon as price open, I'm looking for price to take out some sort of liquidity. If I'm looking for lower prices, I'm looking for price to open, take out a buy side liquidity before trading low or trading to a buy or trading to a fair value gap, a premium fair value gap. In today's price action, price took out a buy side liquidity as soon as the London section opened, which is the manipulation phase. Price took out the buy side liquidity. After you run on the buy side liquidity, you can see the shift to structure trading lower. You can see how price did a shift to structure, retrace. So these two carries another block. You can see the retracement to the other block. You can do your own personal research. Scroll through time frames. You can start from the 5 minutes, 3 minutes, and the 1 minute. So here's the other block. I retrace to the other block. Where's the target? Equal low. You can see, look at this equal low liquidity. So this is where I took my first target. Currently, I'm not in any trade. I already closed my first position, which was this equal low. At the time of recording this video, I'm not currently on any trade. The trade I took was this sell, and I already took profit at this sell side liquidity. But you can see how prices have been trading lower, leading to the weekly objective to the sell side liquidity. So as soon as the New York section open, I'm anticipating the New York section to trade to take out the sell side liquidity, and we might see a retracement back to the weekly range. This was the trade I took. Retracement to the other block. Stop loss at the high. Target. Equal low liquidity, which is this liquidity is actually Tuesday's low. So this is Tuesday's low before the candle close. Candle close. Price traded to the low. Took out the low, making it an equal low before trading higher. So this is the trade. So you can take a screenshot. I'll leave it so you guys can take a screenshot. You can do your own study. Take your time. I've showed you how I do my daily, how I look for daily buys and how I go about my trading on each day. So this is a 1 to 3 hour, 3.4 hour. So that is all for this video. See you guys in the next video.